U.S. stocks ended last week mixed. The Dow gained 1.03%, the S&P 500 rose 0.06%, and the Nasdaq fell 1.14%. Last week, equity markets were supported by stronger than expected second quarter earnings, prompting UBS to raise its S&P 500 target to 6,600 by year-end and 6,800 by June 2026, compared to Thursday's close at 6,370. Earnings across the index rose 8% year-over-year, outpacing forecasts of 5%, while the Magnificent Seven delivered 30% growth. On the corporate side, Meta signed a $10 billion six-year deal with Google Cloud to expand its AI infrastructure. NVIDIA shares weakened on reports of halted production of its China-specific H20 chip, while Intel gained more than 5% after confirmation that the U.S. government will take nearly a 15% stake. In macroeconomic news, Fed Chair Jerome Powell, speaking at the Jackson Hole Symposium, signaled that economic conditions may soon warrant interest rate cuts. Markets are now pricing in 2 cuts before year-end, despite doubts over September. Meanwhile, Canada announced it would drop most of its retaliatory tariffs on U.S. goods ahead of the upcoming USMCA review, though duties on autos, steel, and aluminum will remain. This week, markets shift from reflection to action. Investors are parsing NVIDIA's Q2 earnings for clues on sector strength, while Friday's personal consumption expenditures, PCE index, will be pivotal in shaping expectations for further Fed easing. The economic slate remains busy. Monday brings new home sales. Tuesday delivers durable goods orders and consumer confidence data. Thursday unveils the revised Q2 GDP, jobless claims, and housing figures. Then Friday adds the PCE, trade balance, and updated Michigan consumer sentiment. Markets are digesting last week's dovish shift from Powell at Jackson Hole, now pricing in a strong likelihood of September rate cuts, close to 80 to 85% probability. Though sticky inflation may temper expectations. Globally, inflation updates from the Eurozone and GDP releases from Canada are also on the radar, offering clues on international economic resilience. Meta has struck a game-changing 6-year, $10 billion-plus deal with Google Cloud, enabling it to tap into Google's servers, storage, and networking infrastructure to accelerate its AI ambitions. This rare alliance between fierce competitors highlights the scale of Meta's commitment to AI, backed by $72 billion in infrastructure investments planned for 2025, and its race to build superintelligent capabilities and deliver investor returns. All eyes are on NVIDIA ahead of its August 27th earnings report, with Wall Street bracing for powerhouse results. Analysts expect roughly $45.9 billion in revenue and $1 EPS, representing year-over-year growth of 53% and 47% respectively. Sentiment remains firmly positive, with at least 9 analysts raising their 12-month price targets, pushing the average toward $194. Despite the cloud of U.S.-China trade frictions and recent stock pullback amid AI valuation concerns, expectations are that strong Blackwell GPU demand and easing export tensions will shine through in the results. Intel enjoyed a stellar week, closing the week up just over 2%, but rallying nearly 9% during the week on a wave of bullish headlines. The spike followed confirmation that the U.S. government will take a roughly 9.9% equity stake in Intel, a $8.9 billion investment tied to CHIPS Act funding aimed at boosting domestic semiconductor manufacturing. Markets welcomed the move as both a financial lifeline and a strategic validation of Intel's role in America's tech future. Oil prices rose 3.25% last week, lifted partly by geopolitical uncertainty over potential peace talks between Russia and Ukraine, but more firmly supported by fundamentals. U.S. crude inventories fell by 6 million barrels, far exceeding the expected 1.8 million draw, underscoring strong demand. In addition, Baker Hughes reported another decline in active rigs, the 4th drop in 5 weeks, signaling tighter supply ahead. Last week, gold prices rose 1.34%, buoyed in part by dovish hints from Jerome Powell at the Jackson Hole Symposium, where he signaled a shaky U.S. economy that could soon warrant rate cuts. Spot gold gained traction as traders increasingly priced in a September cut, with the probability climbing to around 85%. Despite some pullback late in the week amid a firmer US dollar, gold's upward momentum remained intact as markets continue reading Powell's tone for clues on the Fed's next move. Palladium surged 3.22% last week, driven by persistent supply concerns and positive industrial demand. The market remains tight due to limited output from dominant producers like Russia and South Africa, and the metal's critical role in automotive catalytic converters continues to underpin its value. Additionally, speculative buying amid tariff worries and a structural supply deficit, though narrowing, is reinforcing bullish sentiment. Euro-dollar edged higher by about 0.13% last week, driven mainly by a dovish turn from Fed Chair Jerome Powell at Jackson Hole, which prompted US dollar weakness. The pair briefly climbed above 1.1700 as markets priced in an increased likelihood of a September rate cut. On the European side, Germany's economy remains fragile, with Q2 GDP contracting by 0.3%, raising recession fears and reinforcing bets that the European Central Bank may hold rates steady amid weakening business confidence.